Hey everybody, what's up? We are back with another stock analysis. Today we are looking at Sonos. So they do audio products focusing on headphones, music, speakers, things like that. So the company has seen a fairly significant downturn over the past couple of years, but they just got a new CEO and the stock price is looking like it is in an uptrend now. So we're going to get into their financials, go over a couple other things, and basically just see what's going on with the company, possibly talk about investing, and that's about it. So if you're interested, make sure to subscribe. If you haven't, I make these videos just about every single day of the week, and that's it. So let's get into Sonos. So before we start going into the financials here, I just want to point out this screenshot I found from an article I was reading. So their new CEO is a very loyal customer of Sonos. He has Sonos speakers and a soundbar and apparently a tattoo of Sonos headphones, which is wild to me. But basically, what I'm saying is the CEO loves the company, uses the company's products, and is clearly very, very interested and invested in the company. So that is definitely something very, very positive that you want to see out of a CEO. So that to me is a very big green flag right off the bat. And now getting into the actual company, so we can see wireless audio products, founded and headquartered in California, so in the US. Market cap is at 1.6 billion, no dividend. Target price is currently at 15 and no listed long-term growth rate right now. So target price is a little bit above where we are now, which is sort of positive. Nothing really negative there, I should say. Looking at the mini chart here, just to start off, you could see their stock price was doing really well for a while. In 2021, they saw an all-time high right around $40 a share. They're currently obviously at 14 now, and it looks like there has been a pretty steady decline since 2021. Saw a little bit of a comeback in the beginning of 2024, but kind of declining since then. And now, over the past couple months, they have seen the stock price raise again. So hopefully, they can actually see some sustained growth in their stock price. Looking at the growth summary, there are no 10-year estimates, but the 5-year estimates are fairly mixed. Net income and cash flow are both positive, which is good. However, sales and the 3-year averages are all negative, and sales, or I should say EBITDA, is also negative on the 5-year average. So fairly mixed here. However, I would say that long term, the summaries should be positive. Especially important is the free cash flow, which is seeing 6.7% growth over the next 5 years. So that is positive. I think free cash flow is probably the most important thing, other than maybe sales. So overall, I think it's mixed there. I think with the new CEO, we could definitely see that change for the positive. But now getting into the financials, the income statement, we can see their all-time sales were right around 1.7 billion, and we're seeing a slight decline since then. We're at 1.5 now. Operating income has also gone negative in 2024. Net income has been negative for 2 years. And actually, they only saw positive net income for 2 years in 2021 and 2022. So overall, it's not even just a recent leadership thing. It's really just overall the company has never seen net profits, at least in the past 10 years. One last thing is their total shares. It looks like they have been rising fairly steadily. However, in the past year, they have seen a slight decrease. So nothing too much to say there for the total shares. But overall, just final comments on the income here. It looks like it's not great. Now, I'm going to zoom out to the quarters here and see if it looks any better over the year. And it looks like not really. December is definitely a big quarter for them, obviously, with Christmas and the holiday season, everything. People are buying a lot more products like headphones and speakers, but it seems like they're just losing too much throughout the rest of the year for that seasonality to really make up for it. However, one thing I will say is that unlike prior years, they are seeing a net profit in June 2024. So there is technically, although I doubt they will see a full year profit, but depending on how well their December quarter was, they could possibly see a very close net profit for 2024, although I still think it'll probably be negative for the year overall. Um, but overall, I think it could be looking better possibly soon. Um, just reading through that article, which I think was a Wall Street Journal article. I'm sure if you look it up, you might be able to find it. But just reading through the article about their new CEO, it really seems like they are committed to making a lot of changes for the company, which in my opinion sounds pretty good. Um, Going into a few more things, their balance sheet. So their assets overall have been declining for the past 2 years. We can see here, if we zoom out to the yearly view, we can see overall their assets peaked in 2022. They're coming down to around 900 million now. Debt honestly is very, very manageable. They do not have a lot of debt at all, which is good. I think they should honestly probably have more just based on how the company is looking. I think they can take out a lot more debt and use that to fuel growth. Um, if that's the plan, I'm not sure yet, but it just seems like that would be a good plan for this company. Moving along to their cash flows, I think I know what to expect here. Their operating cash flows can't be too great just based on how little profit they've been having. And you can see recently they have been a little mixed and actually lower, significantly lower than their all time high cash flows in 2021. 2024 does look pretty good though. However, we could see overall their free cash flow is actually still positive. So which honestly the numbers aren't adding up for me too much here because negative 137 financing, negative 100 investing, and positive 189 operating should come out to negative. So we do have a net change in cash, which does make up for that difference, but overall their free cash flow was still positive, which is good. And okay, the way they calculate it is just differently. I was assuming they would just add these all together, but their net cash with operating activities minus their capital expenditures and their fixed assets. So their free cash flow is positive, and it was over the past 2 years. And honestly, it is just in general fairly positive. And they're not really bankrolling themselves with debt. They are selling a lot of stock, which is where this negative invest or negative financing cash flow is coming from. So or actually, no, sorry. They're buying back their stock, which is where the negative financing cash flow is coming from, which is honestly a positive thing. So, considering their operating cash flow is still positive, their investing cash flow and their financing cash flow is negative, I honestly think it's pretty positive here. Everything looks fairly good, very normal for any company. It's just a matter of driving profitability at this point. So, looking at their segment history, we can kind of see where their sales have been declining, visualized a little bit more. So seeing that high in 2021, 2022, and fairly steady decline since then, it's really just a matter of can they drive growth again. So although I was saying profitability is the issue, the larger issue here is sales growth. So although looking back on my own comments, which I'm doing now, they've really never had net profits. So realistically, it's not sales growth, it's profitability. I'm just going to keep flopping back and forth on my opinion for that one because either way, both make sense. Gross margin has improved over the 5 year average, which is good. Operating margin is a little bit actually significantly below. And then obviously, net margin is below as well. So hopefully, there will be some changes here soon. We can look into the quarters here and see if there's any quarter over quarter changes. So gross margin still looks fairly good at 45. Operating margin again is still basically in the same range it has been for the yearly. Net margin saw a little bit of an increase over the past quarter. So overall, not great. I mean, this isn't like enormous, huge, unsustainable losses, but it's something that needs to be addressed very soon. But other than that, their free cash flow margin does look fairly solid, which is good. ROA, ROE are following net income where they are still continuing to go down. And one last thing, their long-term debt to total equity. So this is what I was talking about earlier, where they probably should take out more debt. Their debt to equity ratio is only at 13% right now, which is very, very sustainable, super healthy for any company. They could probably put this all the way up to 80 to 100% and be perfectly fine. I think they could use all of that debt, all of that money to fund massive growth, increase profitability in the company. It's just a matter of will they do that, which you can see it has been increasing over the past 2 quarters and actually has increased a lot over the past year and a half. But it's just they need to be doing more, in my opinion. And that is just something that we'll have to see with time. So now moving along, let's see if we could find any information on their recent earnings reports. which we should be able to if it wants to load for me here. So this is actually for 2025. Let's go back to 2024 and see if we could see some. So we do have a metrics recap here. Hopefully there's a decent amount of info, which we do have. So first glance, I'm seeing a lot of negative numbers here. Products, this is for the fiscal year, I believe. So product revenue, speakers beat slightly, system products beat fairly significantly, partner products beat. Region revenue, America's revenue fell 12% year over year. I believe this is probably Europe, fell 30% year over year, and Asia Pacific increased 6.9%. So overall, their total revenue has seen massive decreases over the past year, which is not great. Gross margin beat slightly, EBITDA margin beat by about 3%. Inventory fell 32% year over year and is higher than estimates, which could be a bad thing. I think it would probably be better if inventory was either in line or slightly lower, only because if they have this much inventory and it's way higher than the estimate like it is here, that basically means that they were expected to sell a lot more and they didn't. And again, overall revenue fell 16% year over year, which is not great. Let's see if there's any. There are some analyst comments here which we could look into, which I always enjoy looking into. So we do see a price target raise from $10 to $15 for one analyst, and then the other target remains at 11 for the other one here. So progress in recovering from app rollout and asserts that the worst seems to be over. So one thing I did not talk about yet, and I will go into with their stock price falling so much, is a big thing that fueled their stock price falling was they rolled out an app for their users. It was basically a massive overhaul of the app they used to have, and the app didn't work. Products weren't working with it. This basically was the huge thing, that the huge catalyst really that kind of caused them to change CEOs. Their stock price dropped massively. It is because their app that they had did not work at all. And apparently a lot of customers genuinely just could not use their products at all that they purchased. So one thing that most likely happened with that is they had loyal customers that bought their products, and those customers went to use their products that they purchased and couldn't. Now those loyal customers are going other places. So it's just a matter of time of winning back those people, building a newer customer base, and kind of rebuilding trust in their products from the problems that happened with that app. Um, Another thing, emphasize continued uncertainty, and the valuation is apparently at a premium, and believes again that the worst is over regarding the app issues. So I think it's really either flat from here or up from here. Um, Pressure from higher discounting foresees reduced revenue, increased intangible and app expenses to weigh on their EBITDA. And then again, just uncertainty, a lot of uncertainty, revenue decline. So overall, it's really just there's a lot of uncertainty here. One thing to say is their CFO, I believe, is from Apple, and profit focus shift again is being highlighted. So hopefully, this leads to some really positive things in the future. I think that their leadership is really the prime focus here, where there's a lot of potential. And obviously, you can see there is a little bit of optimism over the past few months here. The company has basically only gone up since last August. So hopefully, we can see increased growth from this. Me personally, I am considering an investment in the company just because of this with their leadership. And honestly, just based on where they used to be, there's a lot of potential growth upside, possibly even further in the next few years. But overall, I think it's definitely a bag hold kind of situation. But yeah, that's about it. That's all I have for Sonos here. If you enjoyed, please subscribe if you haven't. See everybody in the next video. Thanks for watching.